As of this recording, Bursa Malaysia healthcare stocks are flying. Most of it is driven by glove stocks like Top Glove, Hartalega and Supermax. But guys, there's more to healthcare stocks than just glove stocks. Drugs, hospitals for example. And leading the way for drug stocks is Duopharma Biotech Berhad. And the stock is up 87% as of this recording based on a 1 month time frame. But the question is, should you buy it? Hey there, MJ here from FIRL. Welcome back to the channel, the best place for long-term stock investors. In this video, you're going to learn what Duopharma does, its history, some of its financials, and as usual, the risks and potential rewards that you might get if you choose to invest in the company. And of course, if you enjoyed the video right at the end, remember to give it a like, subscribe, and of course, click on the notification bell so that you know when new videos are out. So, what does Duopharma do, Duopharma Biotech? Well, they actually manufacture, they do research and market generic drugs. Today, they do over 300 of these drugs. So you might be wondering, okay, what are generic drugs? Basically, they are drugs that have been out of patent. What are patents? Let me explain. A patent, or in this case, a patented drug, is one where the government only allows one company to produce that drug, usually for over 20 years. So after that 20 years, then the drug becomes generic, which means that any company can manufacture it. And Duopharma Biotech is one such company. So Duopharma actually has 3 segments for their drugs. The first segment is consumer healthcare. Basically, these are kind of like drugs that treat not so serious ailments or sickness. For this segment, they manufacture about 70 plus consumer healthcare products. Some of the example includes vitamins like Flavats and Champs. For skincare, that will be Dermaplex, and for eye care, Eye Glow. The next segment that they have is classic pharmaceutical. Now this is when the sickness or ailments gets a little bit more serious. Okay, I hope I'm pronouncing some of them right here. Examples of what products are in the classic pharmaceutical would be Ufadil. So this is for respiratory problems. Then there's Accugesic for your nervous system, and then there's Ravimed for your genitals. The last and third segment that they have is specialty pharmaceuticals. Now this is where the serious stuff happens. So drug examples in this specialty pharmaceutical segment for them would include drugs like Vascor, Corvest and Perinase for cardiovascular. Then for cancer or oncology, that would be Kytron, Zuhira and Letronet. And then things like for diabetes would be Insugen and Basalog 1. So let's take a look at Duopharma's history. It was incorporated in Malaysia as a public limited company on the 23rd of August 2000. It was founded by 2 industry veterans, Chia Ting Po and Ang Bi Lian. Then in 1986, the company started to build a production plant that caters for tablets, capsules, and for oral preparation. In 1995, they moved into an 89,000 square feet factory in Klang. In January 1996, they finally got approval for the hemodialysis liquid production facility, which then allowed them to treat kidney diseases. That's quite big. In the same year, they got the approval for volume injectables. Now this is really huge for them because now they could produce drugs that went straight into your blood, which is much more expensive and higher margin than just taking tablets. Moving on to the 2000, in January they began construction of a new factory that was 90,000 square feet big, which was involved in the production of CAPD. Basically, it is for machine-free dialysis machines. Then it also helped with the formulation of erythropoietin or EPO, which helps with chronic renal failure, which is related to the kidney as well. In 2002, it got listed on Bursa Malaysia for a market cap of about 200 million ringgit. Then in 2005, it got acquired by the Chemical Company of Malaysia, or CCM, and henceforth, its name was called CCM Duopharma Biotech. CCM bought a 36% stake in the company Duopharma for about 134 million, and then later on they increased their stake to 74%, which only implies that they probably paid around 260 million for that stake. 12 years later, the company was demerged. In other words, they got out of CCM, and the largest shareholder today is PNB, or Permodalan Nasional Berhad, with a 46.4% stake. As of this recording, they have a market cap of about 2.1 billion ringgit. Not bad. Let's take a look at the current CEO. Right now, the one running the ship is one Leonard Arif bin Abdul Shatta. He has degrees in law and economics from Monash University, Australia. After graduating in 1988, he first joined a law firm and then the Petronas Group. Then, in 1990, he did business development at CCM. By 2000, he was already the managing director of Usaha Pharma, which is CCM's pharmaceutical retail arm. In 2003, he became the general manager of ICI Paints Malaysia, and then eventually became the managing director in 2005. What a climb! And finally, by 2008, he became the CEO of CCM Duopharma Biotech Berhad. Then in 2015, he became the Group Managing Director of CCM Berhad, not to be confused with CCM Duopharma Berhad, all the way until 2017, where he was then re-designated back into CCM Duopharma as the Managing Director. Okay, now let's take a look at the numbers. Not just any numbers, the financial numbers to be specific. Let's start with the revenue. In 2001, Duopharma made a revenue of 56 million, and then in 2019, they made a revenue of 576 million, more than 10 times. In the first quarter of 2020, they made a revenue of 158.7 million ringgit, up more than 8 million from the previous year's first quarter, which was 150.4 million. A lot of this was due to the private sector buying more of their drugs and products. Now, let's move on to the profit before tax numbers. In 2001, they made 15.4 million in profit before tax. Then in 2019, that number was 70.8 million. Not bad. In the first quarter of 2020, the company made a profit before tax of 17.7 million, which was lower than the previous year's 18.8 million. Why? Because the US dollar strengthened and a lot of their loans are being paid off in US dollars. And that's why the profit was lower. Let's now take a look at the debt. In 2002, the company actually had no debt. In fact, they had a net cash of 13.5 million ringgit. But then in 2020, first quarter, they have a net debt of 149 million ringgit. This might be a cause for concern for investors, but another way to look at it is that they are pretty confident with the business growth, which means that they can afford to take on more debt. Now finally, let's take a look at my favorite financial number, the operating cash flow. In 2002, their operating cash flow, or they generated 14.6 million in operating cash flow. Then in 2019, that number grew to a whopping 70 million. Pretty good. In the first quarter of 2020, the company made or generated an operating cash flow of 19 million ringgit, which is a huge difference from the previous year's quarter, which was a negative 9.3 million ringgit. Why is this? Because their inventories actually decreased, which means they've managed to sell more drugs. So now you know the numbers, you know the business. What are the rewards that you might get potentially, and what are some of the potential risks that you will face if you choose to invest in Duopharma Biotech? Okay, here's what I think the first good thing is if you choose to buy Duopharma. You know how we always complain about rising medical costs? Well, they sell pharmaceutical products, they are part of the cost, And that is why the pharmaceutical market in Malaysia is growing at 9.5% every year. That's way higher than your inflation rate. So that's a really good opportunity. Then, the next good thing that I find is that it requires a lot of government approval for a company to manufacture certain drugs. And trust me, it's not easy at all, and they review it once every 2 to 3 years. CCM is in a very good position, and those or any other drug company that tries to enter the market will find that there's a very big barrier to entry, which means that Duopharma is in a very secure place when it comes to its profits. Now, what are some of the risks? To me, I think there are 3. The first one is a weakening ringgit. You see, for them to sell drugs, they have to buy this thing called an active ingredient. Now, what is an active ingredient? Active ingredient is just a chemical compound of the drug. And a lot of this is bought in US dollar. So when the ringgit weakens, then the cost of their raw material will rise, which will affect the profits. The second risk is that Duopharma is very heavily reliant on the Malaysian or local market, which accounts for 92% of their sales. This just means that their growth potential is only capped to Malaysia. Before I go on to the last risk, let me explain to you this thing called margins. Now, basically, margins are for every dollar you make, how much of it do you keep? For example, for every dollar you make and you keep 20 cents, that means you have a 20% margin. Think of it as how much money you save of your income. Now, here's why what I just told you is relevant. Because the final risk to me is that in 2015 June, the company actually consolidated a lot of its business units, and that actually reduced their previous margin, pre-2015 margin of about 25% down to 11 and 12%. And this, as an investor, to me might not be such a great thing. Hopefully, you now have a better idea as to whether or not you should invest in Duopharma Biotech Berhad. Come watch some of our other videos, and remember to like the video as well as follow us on Facebook and Instagram.